All right, a quick Goldilocks update. This is just showing last week's action. We actually opened up here last week about 1704, continued down, made a new low, 1662, new low from the move recently up to 1800. So 1662, 1800. Again, I'm looking at gold. If you're trading short term, that's one thing. You're looking at a day-to-day basis when you look at a profile like this. And you can see Friday actually had a real nice, got a lot of folks got short in the hole once we broke that D unit right in here, and that reversed really hard. And if you got short on that breakout and you didn't cover it, probably in this F marker right around that 1680, it was a bummer because that thing ripped your face off. And gold along with oil on Friday jammed up 1680 all the way up to 1715. But let's talk big picture. That's a day trading look on Friday. Big picture, if we pull this back a couple weeks, you're going to start to see again we fell from that high of 1792 down to 1662. Now 4 days later from that low, you're coming into the kind of the go no go zone. So if you're bearish, which again weekly chart, and I'm going to bring that in a minute, kind of shows where we are on the gold. But this area right here, 1725, 1742, is probably the area you want to look to get short again. And really you're talking about only 50 points higher. And you'd stay short as long as we stayed below that 1800 area on a close for at least 2 or 3 days. So that's how gold looks. Why do I say that? Well, here's a quick reason why. I'm going to bring in just a gold chart just to overlay on top of this on a weekly from a different view here on a different program on the Thinkorswim. But you can see this real nicely here on a weekly. Now this is going back 3 years, very nice trend, but things are starting to change really going back since last fall, and I'm going to zoom in a little bit here. And you can see here's where I actually, on a bigger term picture, I know if you're trading a weekly chart, right in here this week of it was around the last week of September 26th, was when you got a sell signal. And basically what this signal says is anywhere now going forward, as long as we don't close and make new highs on a weekly basis, which was 1923, you want to continue to short the rallies. And this has happened now a couple times. Once, now this is the second time. What I'd be looking here for confirmation on this original short signal, because everything has stayed well below that 1923 area, is probably look for another break of this 1535, and that's why I keep saying I think the 1400s are in the cards. Now if you pull back even broader, however, what I'd like to see is on the monthly. The monthly chart on gold is just beautiful if you've been a bull. There has been no sell signals going back decade plus. I'm looking at a 10-year chart here. This chart right here from 297 up to 1923 goes all the way back to early 2001. And so that's a very powerful chart here, and you can see we have not, and the way I look at these charts, we almost had a little blip here, but we did not get a sell signal. And even up to today, we're not seeing a monthly sell signal yet. So confirmation on the longer term trends, we're getting them on the weekly, we've got them on the daily, but we're still not seeing it on the monthly. So you'd probably have to wait another month or two before you'd see it. It looks like right now, because we're just not. It's just riding above that 10-period moving average very nicely. It's not even close at this point. So I'd have to see probably a big flip downwards on this on the monthly. So we'll go back to the weekly, which is the next biggest, and then the daily. Daily's all kinds of chop going on. It's basically sell signal, buy signal, sell signal, buy signal. But all the sells are still in play here because we're not making new highs. So keep this in mind on gold. Again, on an intraday basis, gold has been a great trading vehicle along with oil, which I'm going to do another video on here in a minute. But I'd like to, again, if you're on a swing trade basis, you want to look at, again, maybe 3 to 4% risk, and that's all that is when you're talking the 1740 area up to about 1820. About 17.5 points as a percent. So it's not a big move you're talking here. Now, selling 1 or 2 contracts if you're a small player, not a big deal. You're talking about risk of basically 6-7 grand. So that's it. We'll see you on the other side, and be careful out there trading gold. It's a volatile sucker out there right now, and we'll see you on the other side. Flip. Bye.